Paul Martino, Bullpen Capital, has invested a lot of money in up-and-coming tech companies like FanDuel. But before we talk about FanDuel and where you're investing, tell me, is there a bubble in venture capital right now with these sky-high valuations for companies like Uber and Lyft?
Yes, absolutely in my opinion, but I think it's surprising the way the bubble is manifesting itself. You use Uber and Lyft as examples of the crazy prices. We see the crazier prices in terms of revenue multiples on the enterprise side, not on the consumer side. And so Uber and Lyft's revenues are growing so rapidly, you can at least make an argument for those kinds of prices. We're involved in some enterprise software companies trading at 40, 50, 60, 80 times sales. And when you look at a company like Zenefits raised at $4.5 billion, we see the bubble way more on the enterprise side than on the consumer side, which is the opposite of the bubble in '99.
All right, let's talk about the consumer side, because you're invested in a company called FanDuel, which is very hot. It's where online fantasy players play against each other for money. How did you get involved with FanDuel?
So it's an area I've always been interested in, and I was an original investor in Zynga. I had previously started Tribe with Mark Pincus, and so this confluence of gaming and social gaming and sports, etc., was always interesting. And I happen to know the original VP of Business Development when the company was just getting off the ground. He used to be on the board of one of my other companies. He called me up, he said, "Paul, I got something that you might be interested in." And Nigel went out, the CEO of the company, he pitched 78 venture firms. We were the one firm out of 78 firms that went into his company.
Can you talk about the growth of FanDuel? Where is it now? Where do you see it at the end of this year, next year? Maybe we're going to see it across the street with an IPO. You can tell me.
Yeah, well, that's always why you play the game as a venture guy, that's for sure. But the company's been growing consistently at a 3 to 4x clip year over year. You know, we're sitting on doing about $60 to $70 million last year, and I think you'll see us do 3x that this year. And so it's just tremendous growth for a consumer company of that kind.
And what about legal problems, addiction problems? Because clearly a lot of people want to gamble online and makes things easier, but there are problems with that.
Yeah. Well, FanDuel operates under a very clear exemption to US law, which is different. A lot of people try and lump fantasy sports in with other kinds of online gaming, for example. But fantasy sports is explicitly exempted in an act that was passed by Congress in 2006. And so the regulatory environment and the framework under which we operate is really clear. Now, obviously, we have to do the right things. We have to comply with all sorts of regulations about know your customer. We have to be, for example, I have to, as a board member, go through anti-money laundering regulations, et cetera. So there's a lot of nuts and bolts you have to do. But when you do those nuts and bolts, you can provide a great experience to your customers.
And what's next for Bullpen Capital? Are you going to build on FanDuel and move it to another sport or another type of gaming online?
Well, there are two companies right here in New York that we've invested in that use different kinds of mechanics, but are doing really interesting things in the gaming space. One is called Derby Jackpot. Derby Jackpot provides a front end to the off-track betting systems. So Belmont is this weekend. It's a big race. If you want to actually put down a wager, you can use Derby Jackpot because it interfaces to your state's local OTB system. We like companies like that, operate under clear US law, but really are providing a new experience as opposed to necessarily having to go to the track.
And then finally, how hard is it for you to raise money right now? Because when you're in a hot venture environment, a lot of people, I'm sure, are saying, here, take my money, put it into a new venture. A lot of people say that's signs of a top.
Right. Well, it's both easy and hard. Small funds like ours, sub $100 million, went from 20 of us to 225 of us over the past decade.
Case in point, right there.
And so that makes it both easy and hard to some extent, because at 225 firms, you have to really show differentiation. And our thesis, for example, around gaming and fantasy sports has really been a differentiator. But at the same point in time, you're still one of 224 other people going out looking for those looking for those dollars from the LP.
And then bidding up some of those smaller ventures, which may not be worth it when you're investing in them.
Well, sure. You have to always, you can't just decide that valuations don't matter because you're in a bubble. Actually, that's the day you know that we're really close to the top is when everyone throws in the towel. Fear the whole way up, but when you see that complacency set in, that's when we know it's probably time to start selling some securities.
All right. Thanks a lot, Paul.
Appreciate the time.
And thank you for watching The Street.